Welcome to the Net Group Investments podcast. I'm Lulama Robertson, and today I'm going to be chatting to Trevor Garvin, Head of Multi-Management at Net Group Investments. Today we're going to be speaking about how to identify good managers, and specifically what Trevor and his team look for when it comes to finding a manager that will help investors achieve the desired return objectives. Trevor, thanks for joining me.
Thanks for having me and looking forward to our chat.
So right, let's dive right into it. You often say that good managers do exist, but they're very difficult to find. So in this information age where you've got a lot of noise, how do I identify the managers that will outperform in the long run?
Good question, and I think the critical question, because obviously from our perspective, it's vital that we choose good managers that will perform in time, because ultimately that's what drives our investment performance as the multi-manager. So yes, it's critical. So I'll just be quite brief and name a few of the key things that we look at. So first of all, I think one of the areas that we pay a lot of focus on is downside protection. So how do those managers perform when markets are falling, preserving capital? Because if you can protect on the downside, you don't have to get all of the upside, and you'll still be well ahead of the pack because of the power of compounding off a larger base than if you had fallen more. So downside protection is critical because that's really where outperformance actually happens. The second area is in terms of measuring their actual investment performance or skill. What we found is you need to measure over an appropriate and correct full investment cycle. And generally with us, it's either a 3, a 5, or a 7-year investment cycle, depending on the risk profile of that particular mandate or return objective. So it's vital that you measure over a fair period of time, because very often managers, in fact, research shows it's about 97% of managers will underperform over a 12-month period, somewhere in a 3, 5, or 7-year period, even though that over that full cycle, they perform really, really well. So measure over an appropriate investment cycle. Then, of course, is looking at the investment team. Who is the lead fund manager? How long have they been at the fund? Is there consistency in the analysts within that person's team? So just looking at the whole investment team, how long have they been there? Consistency or staff turnover are things that we would look at. And then I think what's vital is their investment process or their edge. We need to understand where is their edge, because that ultimately is what's going to cause their alpha or their outperformance. So are they able to come up with ideas consistently that is going to generate this outperformance over time? And I think lastly is just looking at the culture of the business. So we want to understand what's the ultimate objective of the business. Are they in it for the long run, or are they in it for sort of short-term asset gathering, trying to maximize revenues in the short term at the expense of building a proper long-term robust business?
So that's very interesting, and the personal aspect seems really important. Is there anything else that factors into your assessment of managers when thinking of people?
Yes. So I think understanding the manager and the people side of things is vital. So without doubt, before we invest into any active fund manager, we want to see those fund manager face to face and look into the white of their eye. And really, it's all about building a relationship with that fund manager. And very often with us, the relationship building can take a long time, sometimes between 1 to 2 to 3 years even, before we've built up that confidence and understanding to give the manager some assets. But once we've given them the assets, they know it's for the long term. And we have several fund managers that we've been invested in with, for example, well over 15 years. So from their side, that's great because they have the assets, of course, long term. Other things that we want to look at is alignment of interest. So does that fund manager actually have money invested into the fund himself? Does he own equity stake within that business? And how is his annual remuneration worked out? Is it based on short-term performance or longer-term performance? Of course, we would prefer it to be based on delivering long-term, consistent outperformance over a full cycle.
Fair enough. It also sounds like you're talking about marriage. So I do want to know, would you allocate money to a manager that you've never met in person, considering how COVID's changed how we work?
Short answer is no. So really, in terms of our due diligence process, we won't give money to a manager unless we have physically been to that manager, seen him in their offices, seen their back office, physically met that manager, and seen them face to face. The only time we won't see a manager is where we are going into a passive index tracking type of a fund. There we feel that we don't have to see a manager because we know it's just a passive index tracking type of investment.
Okay, interesting. And I just want to go back to the part of stewardship.
Yes.
You've spoken about it in different variations, and at Nate Group, it's something that we discuss in great depth. In this case, how do you apply stewardship practically when you assess a manager?
So totally, without doubt, stewardship is vital. And as you said, it's been a key thing within Ned Group Investments, as well as the multi-manager, and in our terms of our due diligence process. So without doubt, we want to see what role stewardship plays with these underlying fund managers that we're giving assets to. And stewardship can really be one of many different things. And ultimately, what is stewardship? Stewardship is really about making decisions that are in the client's best interest or your investor's best interest. So that's really what we look at. And there are a whole myriad of ways in which stewardship can be looked at and measured. So things that we look at, for example, will be communication. How do those asset managers communicate their investment portfolio holdings, their returns, their quarterly reports, etc.? We look at things like their brochureware. How easily understandable is their brochureware? Can the average man in the street understand what the funds are all about, what the return objectives are? We don't want to see lots of jargon, for example, that people don't really understand. We want to look at their website. Is it practical? Is it easy to navigate that website? And then there are things, of course, like transparency in terms of the fees. Do people understand what the fees are of the fund? Are the fees reasonable? If there's a performance fee, how is it calculated? Is it calculated in a reasonable way? Is it well communicated? So these are all areas that really talk to stewardship and fairness to the client.
So now you've elaborated a lot on stewardship, and the discussions around stewardship they vary in asset management, and sometimes we're talking about ESG in some cases. So in this case, I'd like to know, how do you and your team look at ESG and responsible investing?
Good question, and one that's certainly topical at the moment. And yes, so ESG is a vital part of now the due diligence process. If we take Europe, over the last 10 years or so, I would say, ESG has already been a key part of the investment landscape. And let's just remind everybody, ESG is environmental, social, and governance. And all three aspects, I think, are critical. And if we look at South Africa, all three have pertinence. So environment, of course, we know that there's the load shedding going on at the moment, and we need to be aware of things like renewable energy, solar, wind, and the role that can play in terms of also investments now and companies going forward. On the governance side, we've seen some major failures of governance in South Africa, and African Bank and Steinhoff come to mind in terms of that. So again, focusing on governance on listed companies is important. Then that brings us to the last letter, which is really the social part. So given South Africa's history, South Africa has some of the largest income inequality in the world. So that really needs to be addressed. And that talks to things like uplifting society and the active role that investors and fund managers can play in getting businesses to transform. And on that point, things like transformation and diversity are also very important. And an area that we're putting more emphasis on as well. So looking at the investment teams, have they transformed from a color perspective and also from a gender perspective, because diversity in thought, we feel, can add a lot of value to the investment process.
That's really interesting. Trevor, you've elaborated on a lot of things, and we could essentially spend all day talking, but I wish we had more time. I do have one last question, though. When it comes to taking all of the information that you've elaborated on, it sounds really complex. How do you and your team mix these variables to come to that one decision, whether to hire a manager or not?
Yeah, so I guess it's a bit of a mixture of art and science. So really, we have what we would sort of call a quantitative and qualitative process that we're blending and mixing together. So the quantitative process, we have a number of software tools. So at the office, we have things like Bloomberg, we have Morningstar, we have Barra, we have Style Research, which are all quants models that we can load the portfolios in and run them through. And that gives us information in terms of things like their downside protection, standard deviation, volatility, top holdings, correlations, and all the quants side of things. Then, of course, in actually going to visit the fund manager, we have the qualitative side of things, getting to know that manager, how their thoughts and ideas are generated, the culture of the firm, building that relationship. And then we really put these two together using our experience as well, and the quants and the qualitative side, and ultimately make a decision. At the end of the day, what we're then trying to do is blend these managers all together in the best way possible. So things like portfolio construction and fund sizing comes into account there. So how much do you allocate to a particular fund, and how many funds in total do you use within the portfolio? And at the end of the day, we hopefully put that all together to give the client the best outcome and the best chance to achieve those return objectives that we're aiming for.
So like a great investment Picasso.
Exactly. I like that.
Thank you for coming and joining me today, Trevor. It's been such a pleasure. I'll see you in the next podcast.
Look forward to that.
Same here.
Nedgroup Collective Investments is an authorised collective investments scheme manager in terms of the Collective Investments Schemes Control Act. Nedgroup Investments does not provide advice on financial products and will only give you factual information. For further details on our funds and to view our terms and conditions, please visit nedgroupinvestments.co.za. Nedgroup Investments, see money differently.